Hello and welcome to this week's Ferrari Financial US Market News Summary. Well, after a relatively calm week, Friday was the big day when the market sold off in dramatic fashion. We've been expecting this for a little while now, and we certainly got it on Friday when the Nasdaq dropped 75 points, closing at 2,725. The sell-off was very broad-based across the whole market, with both the S&P 500 and the Dow dropping an equal percentage amount. We felt there was a definite change in sentiment last week, with the continuing third quarter earning results proving disappointing, and many companies warning for the coming months as well. The continuing concern over the weakness of the dollar and further reports on the deterioration of the housing market and the credit market in the US just was too much for the market, and really resulted in the sell-off on Friday. Let's now take a look at the Nasdaq Composite chart and get a feeling of where the market may be going in the next few weeks. The scenarios we've covered really haven't changed.
12-month chart now for the Nasdaq Composite Index, because I really want to show you the movement over this last 12 months with regard to the long-term average line here. As you can see, back in July we had what we thought may have been the top of the market for the time being, formed here with the big drop away on the concerns for the credit markets. And in fact we did have a panic day back in August when we in fact touched under the 2,400 level at 2,380 approximately, with a quick rebound. What is significant though is the volume action around this period. Excuse me. We have really two things to look at. The typical build-up that you would expect at a sell-off point here. More importantly, when there was a short recovery in the early part of August, that's when the volume reached its peak. Not so much at the buying point, but at the first opportunity to sell at a reasonable price off the top. Now that's significant to us, particularly when it's reinforced by the fact that when the rebound did come on the news that the Federal Reserve was going to most probably cut rates and support the market to some degree, we did get the inevitable increase in volume on that day and the day after, but it was very short-lived. And notice how the volume has dropped away dramatically at this point here. These 2 points are significant, and even though the rebound has been really more than we expected and has in fact gone on to create a new high, it's done it on relatively low volume. The volume is starting to build again near this new possible top. We're well extended now off of the long-term average line, which is again a point to note. And all in all, we feel that this may again be another top forming and not just a continual trend further upwards. If I draw the long-term trend line, which really came from this point here, here we go, drawing it through there and not at the base of the panic action, but really at the base of the action over that 2 or 3 days, which is really that point, you'll see that the trend line now is showing that the new high formed on Friday with the rather good jobs report and the readjusted August figures has really reached a point well above the long-term trend line and ripe for profit taking and at least a short-term reversal at this point.
So is the sell-off likely to continue next week? The answer to that, we feel, is probably yes. And there is a slight support level that was formed a few weeks ago, just after or around about the time of the Federal Reserve cuts at 2,600. That is likely to be tested. We feel probably broken through. And then the next major support level is down at just under 2,400 for the Nasdaq. And that was really a support level created back in both mid-August and way back at the beginning of March, when that level proved to be a good support level both times. Of course, the Federal Reserve can step in again with another rate cut in the next few weeks, but we feel that the immediate pressure on the market to sell off is still there, and it's liable only to be stopped or slowed down by the intervention of these support levels. Of course, it was interesting to note that the sell-off occurred on the 20th anniversary of the October crash in 1987. Is that significant? I don't think so. I think it was due to happen, and maybe there was just a little bit of sentiment on the day to make it more likely to happen on Friday than on the previous 2 or 3 days. But we do feel that the market is selling off now, and it'll probably be only the support levels that will really slow that down to any degree. The bulls may try one more charge, but we feel that it'll be short-lived. We'll be watching the markets closely, and until next week, it's goodbye from London.